Hello, my name is Glenn Hansman. I'm the president of the British Columbia Teachers Federation, and this video is for members of the Teacher Pension Plan, whether you're a teacher, a vice principal, a principal, a superintendent, or any other member of the plan. January of this year, the biggest changes that the plan has seen since the 1960s came into effect, and we're in a very fortunate situation of potentially having a surplus available to us in the plan to make some additional changes that will benefit all plan members. Victor Choi, our staff person at the BCTF, who's responsible for providing advice and guidance on pension-related matters, is going to walk you through the video and the potential changes and the process that we're utilizing going forward. If you have any questions, we're more than happy if you'll follow up with us, regardless if you're a BCTF member or another plan member that isn't part of the BCTF, but is either contributing to the plan or is currently in receipt of benefits from the plan.
Hello and welcome to the 2018 Pension Information Outreach webcast. Thank you for taking the time to view this presentation. As you know, we have made some recent changes to the Teacher's Pension Plan. I will review the features of the old plan and features of the new plan, then focus on some further improvements. When talking about our pension, I use a coin metaphor since it has two sides that are inseparable. For every year of service, a pension build-up rate is applied, and there is a reduction as per pension rules for retiring every year earlier than 65. The old plan recently finished as represented by the tarnished coin, and the new plan started January 1, 2018 as shown by the shiny new coin. This new plan builds a better pension. In fact, service in the new plan builds a lifetime pension at a 23% higher rate. The old plan's reduction rate is applied as the lesser of 3% per year under age 60 or 3% per year your factor number is less than 90. These reduction calculations and the factor 90 date is still applied for any service in the old plan. This represents a soft reduction, meaning retiring earlier than 65 is subsidized by active members. The new plan reduction rate is 4.5% per year under 61, and that is applied only to the service portion under the new plan. This is still a subsidization by active members as the actuarial rate is 6.5%. Using the coin metaphor, you could think of our members in three categories. A member with a lot of service in the old plan that earned many old coins and a little service in the new plan having just a few new coins. This is a member soon to retire. The mid-career member, a member with most of the coins earned from the new plan upon their date of retirement. At retirement, you will consider three sources of income: the Federal Old Age Security, the Federal Canada Pension Plan, and our Teacher's Pension Plan. You will ask your certified financial planner when to take your CPP. That could be as early as 60 or as late as 70. Designed in 1966, the Teacher's Pension Plan includes a lifetime pension. Our mortality data collected over many decades show members live a very long time. The original Teacher's Pension Plan included paying for a mini pension designed to approximate the CPP amount to bridge you over until age 65, the time you are expected to retire. The new plan, represented by the dotted line, does not build any bridge. Whatever bridge you built in the old plan will be included in your pension. The new plan instead builds a larger lifetime pension, creating more money over the member's retirement years. Just as the new plan starts, we are in the position of possibly making it even better than we planned back in 2016. The new plan represents modernization of the Teacher's Pension Plan. There will be more pension for our members. The new plan is now fair for on-call members, part-time members, and full-time members. A surplus would mean further improvements are possible but require the following to happen. As in the new plan design change, the Teachers' Pension Board of Trustees provided technical advice and actuarial support for the partners to plan these further improvements. The plan partners and the trustees saw early signs of a surplus in June 2017. The plan partners, BCTF, and the provincial government negotiated these improvements. Of course, there are limits related to tax law, pension regulations, and the amount of surplus. Earlier this year, the actuary gives us the okay to proceed, and upcoming in August of 2018 is the final step where the actuary files the surplus and its usage. In order to receive the further improvements to the new plan, a member must be active January 1, 2019. Let me explain that in 3 upcoming examples. Joe is considering retiring July 1, 2018. Will Joe's pension receive further improvements? Unfortunately not. Joe is not active January 1, 2019. Joe's pension will be made from service in the old plan and the new plan. Leslie is thinking about retiring January 1, 2019. Will Leslie's pension receive further improvements? Retiring January 1, 2019 is considered not being active. Leslie will not receive the further improvements, and that pension will be made up of service from the old plan and the new plan. Chaddy is considering retiring February 1, 2019. Will Chaddy's pension receive further improvements? Chaddy was working January 1, 2019 and contributing to the teacher's pension plan for January and will receive the further improvements in the new plan. Plan partners have made a decision to inform all plan members about the possible improvements, as this may influence their decision to retire or not. The following table is part of the one-page handout as support material. This table summarizes the changes from the old plan to the new plan with further improvements. At retirement, your pension will be made up of service in the old plan plus new plan, and if there's sufficient surplus and the member's active January 1, 2019, there will be further improvements. That is, all the items in the gold column will replace those in the blue column. As you saw in a previous slide, the old plan's pension build-up rate is 1.51%, effectively due to a split accrual rate of 1.3 and 2% for salary below and above the YMPE number as set by Revenue Canada. In the new plan, the pension build-up rate is 1.85%, and in the new plan with further improvements, that build-up rate is 1.90% for every year of service. This is a 26% better build-up rate than the old plan. A normal form is the default method of calculating your pension. There are pension payment options that include a guarantee period of 0, 5, 10, or 15 years from retirement. If a member dies, the same pension amount is paid to the beneficiary to the end of the guarantee period. A 0-year option pays the most because the member has no guarantee coverage upon death. The 15-year option reduces the pension to pay for this 15-year life insurance, so to speak. Be sure you seek the advice of a certified financial planner to help you choose. The old plan and new plan default payment options are the same, a single life guaranteed 0 years. In the new plan with further improvements, the default payment option is a single life guaranteed 10 years. This adds pension and value to your pension retroactively for all service. This is a very rare pension benefit indeed. Let me pause a bit to talk about pension payment options. Here is a sample of what I mean by pension payment option. Use your Teacher's Pension Plan online account to generate your own pension estimate. Everyone will be slightly different depending on service, age, and spouse's age. The default payment pension option in the old plan and new plan is a single life guaranteed 0 year. The new plan with further improvements will have a default payment option moved to a single life guaranteed 10 years. Another simpler way of thinking about it is this. The difference between single life guaranteed 0 years and single life guaranteed 10 years has been added to your pension. Or a further simpler explanation is that you will now get more pension. Let's go back to that summary table. If you have service in the old plan and retiring earlier than 65, you'll be subject to the old plan's reduction rate. And if you have service in the new plan, you'll be subject to that reduction rate. If we have the new plan with further improvements, there is no change to the new plan reduction rate. In the old plan, you built a bridge. This will be paid to you from date of retirement until age 65. In the new plan, any earned bridge is still paid out from retirement to 65, and what you would have built a new bridge will be then adding to a larger lifetime amount, as we said in a previous slide. The same for the new plan with further improvements. In the old plan, pensionable service was limited to 35 years. In the new plan, that limit is removed. Every day worked builds a pension. This is employment restriction that has been removed. In the new plan, with further improvements, there is no change. In the old plan, there was no long service recognition. In the new plan, if you work 35 years of contributory service, it would mean any portion of the old plan or new plan is unreduced. This is equity for all employees. No change in the new plan with further improvements. In the old plan, your highest average salary is based on your average of the highest 5 salaries. No change in the new plan, and no change in the new plan with further improvements. The inflation adjustment account in the old plan funds the cost of living adjustment for retirees. This is there as well in the new plan, and in the new plan with further improvements, this is there but with an added 2% more funding to this account. Let's look at the pension amounts for a typical retiree that's 60 years old, has pensionable service of 26 years, and a highest average salary of $80,000. If these 26 years were spent with 24 in the old plan, 2 in the new plan, you will see a pension paid out to 65 of $3,440, and after 65, the lifetime pension amount is $2,670. If you were to move these 26 years progressively more into the new plan, you will find that during those bridge years up to 65, the amount decreases, but the pension lifetime amount starting at 65 increases. The mid-career employee, and then the brand new member who has all of the pension in the new plan. There is no bridge built for this person. However, they start with a larger lifetime portion, and that continues for their lifetime. If we were then to add the new plan with further improvements, what it simply means is there is more pension money. Let's look at an example specifically of how much more money. Let's look at some scenarios and actual pension amounts. Hannah decides to take a 100% joint life with a spouse at age 60 at retirement. If Hannah dies first, 100% of that basic lifetime pension goes to spouse until the death of the spouse. In thinking about further improvements, Hannah is considering working one more year. If that happens, then Hannah's pension will increase by $129, 27 of it due to the further improvements, $102 due to working that extra year. Stanley, in this scenario, chooses a single life guaranteed 10 years, has no spouse. If Stanley dies within 10 years of retirement, 100% of the lifetime pension will go to a beneficiary till the end of a 10-year period. In thinking about working an extra year, Stanley will have increased the pension by $147, $24 due to the possible further improvements, $123 due to working an extra year. In April of this year, the Teacher Pension Board of Trustees sent a communique to all plan members with a very strong message. There is the expectation that plan improvements will be positive for all plan members. You can go to their website to read the details and also read up on further scenarios. The pension information outreach sessions in 8 regions of the province will conclude after June the 12th. However, the support materials, a one-page summary table, the presentation slides, and this webcast may be found on the BCTF website. This is a public site and does not require member portal sign-in. Thank you for taking the time to watch this webcast. If you have any questions, you may call the BCTF at 1-800-663-9163 or call the Teachers Pension Plan at 1-800-665-6770.